And we're getting started with Wealth on Wednesday. Wealth on Wednesday. Listen, y'all, listen. You can build wealth looking at financial principles that are achieved and attained through financial literacy. And you can learn how to master your money and not die broke. It's that basic, that simple. That's what we're trying to do. That's what we're trying to promote. And so here we are, week number 2, looking at 5 S&P 500 stocks paying 5% or more in dividends. Guess what? I've got another 5 on top of the 5 that I've already shared previously that will show with no doubt that the S&P 500 still carries stocks that pay well over 5% in dividends. And there's household names for a lot of them. In other cases, they're hidden gems. And in some cases, there are stocks that we may have overlooked simply because of all the hot talk about, the big names and, the Magnificent Seven and all of that. Here are 5 stocks, 5 additional stocks from the S&P 500 paying 5% or more in dividends. And I want to get into this and share this. So let's jump right into it. And I've even given you an additional bonus one. So let's take this from the top, right? Alexandria Real Estate is ARE. S&P 500 lists them at 9.9%, right? And ARE is a little different. It's a little different. It is what I would call, and they have been dubbed by some analysts as a life science REIT. It's a real estate investment trust. They've been called a life science REIT. And they're trading about, $45-46 per share. And their yield, like I said, is just under 10%. And this is something that's interesting, right? This one, if you get in now before the end of the year, you'll meet the ex-dividend date, and the payout will be the 15th of January in 2026. It's a REIT, right? It's a real estate investment trust. And so keep that in mind. That's what it is. And here's the beauty of it, right? This thing has an annual dividend of over $4, right? Annual dividend over $4. And I say, peep this out. This bad boy is best in class as an S&P 500 life science REIT, making a positive and lasting impact on the world, as is stated on the profile when you review it on stockanalysis.com. I use stockanalysis.com for part of my research. I'll be wide open about it. That's plain and simple. Here it is, $4 a year, almost 10% in yield, right? It's a life science REIT taking advantage of the advances in science, technology, and it's right here at 9.93%, kicking out and paying out. If you jump in before the 31st of this month, you'll get the dividend payout on the 15th of January. That's one of the multiple REITs that are in this list today. One. Okay? So that's ARE, Alexandria Real Estate. Next up You might be familiar with this, Dow Chemical. Dow Chemical actually is a company, right, that is part of the Dow 30 and is also a Dow Dog. It's one of the dogs. And in fact, when we talk about the Dow Dogs, here it is, it's yielding 6%. 6%. And when we talk about Dow, Dow is a company that produces, we used to know it as Dow Chemical, and they go by Dow Inc. now, but we used to know it as Dow Chemical, and, you know, long history, chemical products. They're a standard among folks that are being invested in the industrials, and Dow produces various materials, science solutions, packaging infrastructure, mobility, and consumer applications globally. This thing pays $1.40 per share. It's trading, what's this thing trading at? It's just around 25 bucks. That's the last I bought it at, just under 25. And if we think about it, Dow is one of those companies that if you get in, right, it's 23 bucks right now, 23.01. If you get in, you can stay in, and this thing is going to pay you continually because this is one of those companies that is, like I said, a Dow Dog. It's part of the Dow 30. I doubt if this thing gets moved off of there anytime soon. And investment companies that are invested in the Dow index have to buy it. So it's part of the S&P and part of the Dow. How are you going to beat that? What are you going to do with that? That's one of the things you need to keep in mind. This thing is going to pay out. And so that's an industrial, right? I gave you a REIT. I'm giving you an industrial, and we're moving on, right? So we got a REIT, an industrial, and then look at this right here. Realty Income, the monthly dividend company. The monthly dividend company is part of the S&P 500, Realty Income. And I say this with all sincerity, this is one of the ones that I stick with. I've had it for years. I stick with it. I'm invested in everything on this list except for the utility company. So as we go through, I'm being honest, I'm also carrying out what I'm talking about when I say I'm invested in what I'm discussing here and sharing it as well. Look at this thing. The monthly dividend company. It has a mission to invest in people and places to deliver dependable monthly dividends that increase over time. How many monthly dividends increases have they had over time? 666. 666 monthly dividend increases since they've been founded. It has an annual dividend of over $3 per share, and it has a yield of 5.63%. Think about this. When we talk about the monthly dividend income that increases at that rate, it's dependable and it's known as a monthly dividend company. That's what we're talking about when we talk about S&P 500 companies that deliver dividends over 5% and continue to be dependable. This thing is not moving. This thing is going to stay here. It's going to continue to be part of the S&P 500, I believe, for an extensive period of time. This thing is a monster. And I say it's a monster because it's paying a monthly dividend, not a quarterly dividend, a monthly dividend continually. But accept it, believe it. There are stocks, particularly REITs, that pay a monthly dividend. And this is one of the cornerstones of that group. Realty Income, ticker symbol O. Believe in it. Believe in it, believe in it, believe in it. That's all I can say about that. I am a believer. And in this next one, Edison International, it's not one of my stocks, but it's on the list. And it's on the list for this good reason. It engages in the generation and distribution of electrical power. The generation and distribution of electrical power, and that's a utility, right? That's a utility. And it pays an annual dividend of $3.51 with a yield of 5.9%. Think about that. This is one of the things that we have to think about when we talk about dividend investing. Utilities make up a lot of the cornerstones of dividend investing: utilities, financials, and some industrials, a lot of times household names. But utilities and financials tend to be the base for a lot of our dividends. And so keep in mind at 5.9%, even for a utility these days, that's still pretty good for a company that has large distribution as well as multiple subsidiaries. And that's good. It's a utility. It's on the list. I don't own it. That's all I can say about that. I'm going to leave it right there. So I've given you two REITs, a utility, and here we go. This one's not popular, but it's on the list, and you got to accept it. And I'm invested in it, been invested in it for years, probably as long as I've been invested in Realty Income, in all honesty. Big Mo, Altria Group, been through a lot of changes as far as, dealing with tobacco and everything that's going on with tobacco products. Used to own part of the liquor industry, and now they've narrowed a lot of stuff down over time, lawsuits, settlements. Here we go, paying 7%, and this thing is trading right around $60, right? Dependable, trading right around $60. And one of the things that I do have to say about Altria Group, they're not just tobacco, but they're also dealing with vaping products. They also have some connection to the cannabis industry. There's some connection to the cannabis industry, but it's not heavily into cannabis, if we can say it like that. Check it out. It is a bellwether stock in the industry, right? There's British Tobacco. That's also a company that's pays a high yield, but it's not on this list. So Big Mo, 7%, it's on there. You got to take a look at it. So I've given you two REITs, an industrial, a utility, a tobacco company, and I've got a bonus one because I had to throw this in there, which is, you see it here, Healthpeak, ticker symbol DOC, right? Ticker symbol DOC, Healthpeak. And I chose Healthpeak because, I'm invested in it, been invested in it for some time. And this company does some things that everybody doesn't get into this, right? And let me read off what they say about themselves. Healthpeak says it like this. Healthpeak says they own, operate, and develop high-quality real estate focused on healthcare discovery and delivery in the U.S. So when we talk about healthcare over time, what's that going to look like over time for the U.S. citizen? Is that all going to be assisted living? Is that going to be homes and sober living? There's going to be a wide variety of health facilities that are going to be utilized in order to deal with an aging population, as well as a population to recover and transition between surgery and home. Think about it like this. This thing is trading under $20. It's right around, what, $16? Come on, man. $16. And it's gone up and down. I've been through this year with it. It's gone up and down, but the yield currently is 7.4%, 7.41%. And this one, in all honesty, is probably a REIT that I would say it's cool to get into now, because it's not like LTC or some other health properties that are definitely already established. You can get in now, get a piece of it, get a hold of it, and stay in as it grows and becomes part of the larger market. And it is part of the S&P 500. Why do I say this list? Why do I say this particular list? I say this particular list because when we look at our dividends and our dividend investing, one of the things we have to keep in mind, right? One of the things we have to keep in mind is that our dividends will pay and continue if we reinvest in those dividends. And when we reinvest, they become compounded. And if they compound over time, they pay us more. We generate more shares and we earn more. And when we generate more shares and we earn more and have bigger payouts, let's say like with the monthly dividend company, then we begin to see that snowball effect, that avalanche that begins to build up and come into our accounts like never before, and our accounts begin to swell up. I like to see it. I want to see it. That's what I'm pushing for as a dividend investor. I want to have income come in to where I can replace part-time income with dividend income that's more passive income, and I'm welcoming that day by day. Hope this helps you out. God bless.